All right, let's get right into it. We're all familiar with the usual suspects, your 401ks, your IRAs, but what if I told you there's another financial tool out there? One that's incredibly powerful, combining growth, protection, and some amazing tax advantages, and yet most people have never even heard of it. Well, today, we're pulling back the curtain on something called an Indexed Universal Life Policy, or IUL for short.
I mean, think about that for a second. What if you could have a single tool that gives you the growth of the market, but with complete protection from any losses? And on top of that, it comes with a triple stack of tax benefits? It almost sounds too good to be true, doesn't it? Well, that's the exact puzzle we're going to solve today.
So the big question is, how on earth does this actually work? Let's break down the mechanics of how you can get those sweet stock market-linked returns without that gut-wrenching feeling you get when the market crashes.
Okay, so at its heart, an IUL is a type of permanent life insurance. But here's the magic. It has a second part, a cash value account, that really acts like a financial engine. A piece of your premium pays for the life insurance part, sure, but the rest gets poured into this cash account, and that's where the growth happens.
So how does it grow? Now, this is a huge misconception. Your money isn't actually in the stock market. Instead, the insurance company uses some clever strategies to basically mirror the performance of an index, like the S&P 500. This lets them credit your account with interest based on what the market did. And it's all controlled by two really important numbers: a cap, which is the maximum gain you can get, and a floor, which is the minimum.
Let's play this out with a real, kind of scary scenario. Imagine the market just has a terrible year. Your 401k is getting hammered, everything looks red, and the S&P 500 tanks by, let's say, 25%. What happens to the money inside your IUL?
This right here is the superpower. That floor kicks in. Your interest credit for the year is zero. Not negative 25%, zero. You don't lose a single dime of your hard-earned money because of the market crash. You just start the next year exactly where you left off, ready to capture all of the upside when it bounces back.
There's a technical term for this: asymmetric risk. It sounds complicated, but it's a really simple, powerful idea. You get to share in the market's good years, but you are totally 100% protected from the bad ones. Think about that over the long run. Never having to spend years just digging your account out of a hole is a massive, massive advantage. Now, as incredible as that growth story is, the tax situation is where an IUL goes from being a great tool to an absolute financial powerhouse. This is what really truly separates it from pretty much everything else out there. So check this out, it's a triple threat. First, all that cash value we talked about, it grows tax-deferred, so it's compounding year after year with no tax bill slowing it down. Second, when you want to use that money, maybe for retirement, you can access it completely income tax-free. And third, the death benefit passes on to your loved ones, you guessed it, also income tax-free.
And when you put it side by side with the tools we already know, it's pretty eye-opening. A 401k? Nope, your retirement income is taxed. A Roth IRA? Okay, that's got tax-free income, but it's got zero market protection and really strict limits on how much you can put in. The IUL checks all the boxes. And the reason it can do all this, the tax-free income, no market loss, and no contribution limits, it all comes down to a specific piece of the tax code, IRS Section 7702. That's the rule that gives this strategy its power.
Okay, but we're not done. There's another huge layer to this that a lot of people just don't know about. You see, modern IULs aren't just about what happens when you pass away anymore. They've evolved to become this incredible financial safety net for you while you're still alive. They're called living benefits. And here's how they work. If you get hit with a serious illness, like a chronic, critical, or terminal condition, you can actually access a big chunk of your own death benefit ahead of time. It's kind of like getting an advance. The insurance company will pay you a significant tax-free lump sum of cash that you can use for anything you need. Medical bills, making your home accessible, literally anything.
So here's the big takeaway. Your policy is no longer just death insurance. It's this dynamic, multi-purpose tool. It protects your family if you die too soon, yeah, but it also protects you and your finances if you get seriously sick along the way. It's a game changer.
All right, we have covered a ton of ground. We've talked market protection, that triple tax advantage, and these amazing living benefits. So the million-dollar question is, who is this actually for? Who really stands to benefit the most from a tool like this? Well, it's especially powerful for high earners who are already putting the max into their 401k and IRA and are looking for another place to save with great tax benefits. But it's also a great fit for anyone who wants a tax-free retirement, for business owners, and even for parents saving for college, because the cash value typically doesn't count against you on those financial aid forms.
Now, I need you to lean in for this part because this might be the single most important thing we talk about. An IUL is an incredibly powerful tool, but it's not something you just go buy off the shelf. Its success or failure depends entirely on how it's designed from the very beginning.
You see, a poorly designed policy, one that's set up with high costs to maximize the death benefit, can seriously underperform and even fall apart. But a properly structured policy is designed completely differently. It's designed to be overfunded, which just means you put in the maximum amount of money the IRS will let you. This strategy crushes the insurance costs and basically supercharges the growth of your tax-free cash value. That's the secret sauce, turning it from a simple insurance product into a lean, mean, wealth-building machine. So let's wrap this up. An IUL brings together market-linked growth with a 0% floor, that amazing triple tax advantage under IRS Code 7702, and powerful living benefits, all packed into one contract. If any of that sounds like a tool that could be a good fit for your financial plan, the next step is to see how one could be designed for your specific goals. You can do that by scheduling a totally complimentary consultation over at jungagency.com. It might just be the most powerful financial tool you've never heard of. Well, until now.